So again, I've not made a video in a very long time and I barely have any on my channel anyway, but I thought why not start up again, start helping, give people, not advice, but like teach people about things, teach people about stocks, how to invest, how to do things like that, the basics, because the way I learn and everything in basic sense so that I can understand it easily, and then obviously from there I've grown and understand things a lot more. Since my last video I've learned so much about investing, assets, liabilities, credit, a bunch of things, and on this channel I'm going to try and teach everyone about that because why not? If I know it, I may as well help other people. I'm also now a qualified teacher, which is quite sick. I think last time I made a video I was doing my course, I don't know if I mentioned it, but now I've completed that, so that's out of the way, and I'm working on a bunch of other things instead. So let me start teaching you about everything that I know. First video that I'm doing is going to be 4 simple steps to investing. Investing takes discipline. So the one thing that I want people to understand when getting into investing, or investing if you're doing it now, that it's very simple, it's very easy to do if you have the discipline and the patience and a bunch of these other things. Because investing, it's not a short game, it's not a quick money, it's not starting a business and literally getting things there and then. It's something that's going to take a lot of time to build, but at the end of it you get the rewards. It's just whether you want to put the time into it to actually, succeed and succeed in the field. So 4 simple steps to investing. So the first step is buy and don't sell. That is a very key thing when it comes to investing. Obviously if you're doing trading, if you're doing swing trading, things like that, yes, buy, sell, do all of that, but this is for long-term investing. So the idea of long-term investing is buying and not selling in 10 plus years, 5-10 plus years. You don't want to sell anything. Everything I hold, I have it on Trader 212 and it's in pies, and for the next 30 years, well, one's 30 years, wait, 2 of them's 30 years and 1 of them's 10 years. I'm just putting money into it every single month and I'm not selling. I used to have individual stocks, but now I hold ETFs, and I'm not going to sell because I'm looking for that simple return. I don't have to do research all the time, and I don't really want to do that. So I thought, put everything to ETFs, and boom. I've got, for my dividend one, I've got REITs, so like the property stuff. I'll talk about that in another video, but I've got that. And the idea is that I've got these and I'm never going to sell them. I'm not going to buy a stock that's like Apple and then sell it eventually, and then like AMD, buying that and then selling that. It's like I'm not doing things like that. I'm buying the ETFs and just putting money into that and never selling it, because if I get the average return from like 7 to 10%, then jobs are good. It's my money's going up at the end of the day. One of the simple steps and a part of the discipline that you need to understand that you have to buy and not sell, whether the market goes all the way down. I was up £500, up 32%, and my percentage just dropped. I went below 0. So it happens, like your money, you're going to at some point lose money, but at the same time, in the long term, it's going to go up. That's why you just hold it and just don't sell. Just believe in what you're doing, keep putting money in, keep dollar cost averaging, and boom, you're sorted. So step 1 to discipline in investing: buy and don't sell. Step 2, this is kind of connects into the other one, but patience and being committed. A lot of people want short-term gains instead of being willing to take the long steps, to going through the long journey of getting what they want. They want things to happen now, and you can't always get that. Therefore, when it comes to investing, one of the things that people do is they tend to think in the short term, like they want high gains like in 1 year, but it's not going to happen. It's the stock market is initially there for long-term wealth, so you can put your money into an asset that's going to keep generating more and more money. But if you're not patient and not willing to wait the 10 plus years for your money to grow to start hitting crazy numbers, where you can actually start to think about retirement, what you're going to do, where you're going to put some of the money into other assets. If you're not willing to be patient and be committed to it, you're not going to be a good investor. But literally that simple. But people don't want to do it because they're not patient. They want the money now. They want to be rich now, or just stay average and basic. That's the mindset. It's rich now. I mean, rich in the long term. Be patient, wait, or I want the quick gains, and I'm just not going to wait because I'm not going to get quick gains, and I'm just going to keep living life basic. And people will choose this because it's easier instead of taking the route to get to wealth, which is a big problem for me, and well, for me anyway. Like I said, I've tried to teach a lot of people and help a lot of people, but they don't want to listen because they want the quick gains over the long-term wealth. But yeah, so step 1 is buy and don't sell. Step 2 is be committed and patient to the game because it's just a long-term game. A third important step to understanding investing, the discipline side, is understanding that banks lose money. When I say banks lose money, I mean it loses your money. So you put your money in the bank and your money, it's losing value. You think, oh yeah, I've saved a bunch in there, I've got a lot of money in the bank, but literally you're losing out on so much more money because it's just sitting in the bank. But whilst it's there, you're losing so much because you have things like inflation. When this is I can't say analogy. So you have the bank. This is your 10,000 in the bank. This is inflation. Okay. So let's say inflation goes up a bit, 2%, and your money's just in the bank. You're just adding the same amount every year. It's not really going anywhere because it's not increasing in value or anything. But inflation's gone up. So your money's already lost 2% value because it's gone up by 2% inflation. So inflation goes up again the next year, but your money's still the same and it's lost value once again. However, if you get your money and put it into stocks and it goes up 10%, then inflation goes up 2%, you're still up 8%. So banks, they really do not help because you're putting your money into it, but it's not gaining anything, it's just losing value due to inflation and probably a bunch of other things. But it's not good to have your money in the bank. If you have money in the bank, invest it. But the money in the bank that you should have should be for short-term things, or things between, let's say, 0 to 5 years that you're going to need that money, and that's why you're putting it in there. But if you want to move, well, you want your money to grow, and you're going to save for more of a long period of time, put it into stocks, the stock market, crypto, those things, and start investing it, because then you're not losing value, it's going up in value if you choose the right things. So don't put it in a bank. The banks lose you money. The stock market doesn't, it increases your money if you're smart about it, which is going to link on to the next one if you actually look into everything and pick the right ones. So step 1, buy and don't sell. Step 2, patience and be committed. And step 3, don't let your money sit in the bank because it's not very good for you. Now step 4, the final step, very simple one, very understandable. To understand investing, be able to invest simply, all of that stuff, have discipline in investing, you have to research to an extent. Whether you've got ETFs or stocks. You've got ETFs, you still need to research what's in the ETF. I hold 4 because they all cover things, like different things. They all might share a few stocks each, but they're still in general cover different things that I believe will grow massively over the next few years. So you have to do research into ETFs still to understand how much you're probably going to get a return. You don't want to pick, I'm going to randomly pick ETF bomber clotting phones, and then you're investing in a bunch of random phone companies that grow like 1% a year, when you can actually research into something like EV's looking like it's going to be EV by 2030. Everyone's saying that they want to only use EV cars in their country, so the UK, the US. So we know EV is going to grow quite a bit because it's going to be used a lot more. So you'll look at that, you'll see what stocks are in there, and you've done your basic research. You can research more if you want to, research the companies and all that, but you have to look at what's there so you can pick what you actually want. Now when it comes to individual stocks, you have to do way more research into this. You have to look up how to research, what to look at, the statements, all the things, those things, the earnings per share, whether it pays your dividends, the return on investments, how much the company is making, how much they're losing, whether they're making profit, the profit margins. So much you have to look at when you're investing in individual stocks. So what to do is learn how to research, figure out what you have to look at, what makes a business good. But research is key. It's a very short one that I'm talking about, but research is key. Those are the 4. So you have buy and don't sell. I forgot it. Committed and be patient, because it's going to be a long game. It's going to take a long time to earn your wealth, but you'll get there one day. Understand banks lose money. inflation, all those things. And finally, research is key. So make sure to research, make sure to do these things. But those 4 simple steps to understanding investing and being disciplined. So yeah, if you like the video, like it, subscribe, because I want to grow this channel. I want to help as many people as possible. I want to start doing live streams and have people in and like they ask questions and help them out. But yeah, if you like the video, like I said, like, subscribe, and peace. Dope.